Hi, this is Miles from Milestone Investing, and today's date is the 17th of May 2019, and it's 8:30 in the morning. The FTSE 100, what's going on? We are in this up channel, okay? Now, let me just quickly fix this because it's obviously too broad, but that's basically the channel right there. Okay, so this is the channel that we're in. This was yesterday. So yesterday was Thursday. This is Tuesday. So we got Monday. When we spoke on the conference call, we were here, kind of still bobbing around we're basically in this channel, this downward channel. Tuesday, we broke out. Wednesday, out. Thursday, we're clearly not in this channel anymore. So we're now in this upward channel. And this is today, Friday. Now, Friday, well, at the moment, it looks like it doesn't want to go any further. But when we look at it, it's kind of been hugging the top, and now it could just bounce down to the bottom of this range, but it's still in the up channel. Until it breaks out, it's in the up channel. And it could go up a little bit more, but I suspect it's going to go sideways and run out of steam for a little bit. But we shall see. It's only 8:30 in the morning. If we look at the same chart on a 15-minute basis, and today is here, I'm sorry, 8 o'clock is here. So out of hours, let me just, so you can see it. This is Wednesday. So Wednesday, bouncing around, and towards the end of the day, it basically started to march upwards. Thursday, the whole of Thursday was an upward day. So if anybody was short in anything, this would have caused some consternation, right? The market was up the whole day. Out of hours, look at this, out of hours, there was no upside strength. Today, where we are now, it could be doing this because the first half an hour of yesterday was down before it started marching up. Again, that was down in the morning before it marching up. So this could be the same. But just to let you know that it's still early days, but remember we're in this upward channel. So it could bounce here, and here would be, maybe if I was to take this and come down here, say 7,300. So 27 points below here is going to be the floor. And it might just bounce straight back up again. So we'll see what happens. Right, so let's go now to the companies that we were looking at. Tesco. Let's look at Tesco. And let's kind of get some perspective. I'm going to come in here. Let me just draw my indicators for the days so we know where we are. Okay, Wednesday, Thursday, and today, Friday. Well, what did Tesco do? What did Tesco do? Let me just reduce some of this stuff. So we've got room for the charts. Okay. Tesco bopping along on Wednesday, gap down for the dividend. And here is your, coming from here, this blue line is your break even. And this one here is your target exit. So this is basically the mark scope adjustment here, based on the closing price. Based on the worst price, it'd be down here. It goes nowhere near that, okay? That's because on Thursday, we had a bullish market. So here's remember, for fundamental reasons, this should drop. But if the rising tide of the FTSE 100 generally is rising, it's going to push everything up. And that's basically what we saw here. We had a tug of war. Downward pressure on Tesco, upward pressure on the FTSE, okay? Today's FTSE, as from 8 o'clock, is not so strong. So again, we got some downward pressure, and it should come back down. It should come back down. Now, where we are now is based on fundamentals. So if it stays here, that's where it should be anyway. But we do know the market likes to overreact, so we shall see if it hits our target exit. That's Tesco. The next best one was Royal Dutch Shell. Yeah, let me just put in my day markers so we can see where we are. Okay, so what's going on with Royal Dutch Shell? Royal Dutch Shell marched up on Wednesday, similar to the FTSE, especially at the end of the day surge up. Remember, Royal Dutch is number one in the FTSE 100, so this and FTSE should be identical. Again, a strong move up. Now, this one is moving up again right now, okay? It's not doing what the FTSE is doing, but I can see straight away that there is not real much upside strength. That might come later, but it's not there at the moment. Again, still early days. 15 minutes, candlesticks. So what we've got, if I zoom in a little bit better, we can see that we had upward momentum at 8 o'clock and then very little strength. And this one, the top of the wick is there, similar to the top of the wick of here. So it's not going anywhere. It's not gone up. This one, the height here was 2543. The height here is 25, practically 43. This one is not going anywhere, okay? The strength is gone. On the upside, strength is gone. If we look at RSI, we're nearly at the top of 70. So this is nearly getting to the point of being too expensive. The height of the height of right here, this is the histogram on the MACD. The height of it is not increasing. It's not increasing. Therefore, the blue is going to start to bend down, and this should be, the height should be over. Okay, in terms of the upward march. Again, something has to happen to push it up. And again, where we look for that to see where the strength is coming from, we look at the volumes. Here, look at the volume. The volume here is here at 8:15. Then the volume was reduced. And then this volume will kick in later on when the next candle moves on, so we know what that's about. But at the moment, the volume is not increasing. So therefore, so here's the thing. If you have increasing volume, then you're likely to have an increasing push, either increasing, if there's increasing volume and it's bullish, the share price will go up. If it's increasing volume and it's bearish, the share price will come down. If the demand or the volume is weak, it's coming down, that should have a downward pressure, even if it's bullish. If it's a reduced bullishness, the price should come down under normal circumstances because the demand is going down. However, there could be this ripple effect where a big push upwards could have a ripple effect onwards going upwards anyway. So even though the volume is coming down, the price could still go up. So this is where this one becomes a little bit tricky because a downward volume should tell you that there is less demand and the price should come down as well. But if there was a big push prior, like a really big massive push upwards, volume spike, then that volume spike could effectively be saying, creating the effect of all this demand that was created earlier has sucked up all the supply, and therefore, you know, you're still having the effects of that. It's like having a hangover. You drank yesterday, but you still feel the effects of it in the morning. You can see the ripple effect that is still there. That's one option. So it's tricky on that one. It can go either way. But in addition to that, market makers can actually alter the price themselves. In other words, market makers can make the price go up when the volume is going down. So there we have another tricky scenario. So the bottom line is this. If it's a very bearish volume up, then the share price will come down. If it's very bullish volume up, then the price should go up. So bullish, share price go up. Bearish, share price should come down. And if it's weak bullish, depending on how strong the previous ones were, if there were spikes, it can still continue to go up. Otherwise, it should start to weaken and come down. I'm looking at no upside strength here. On the upside, I'm looking at the fact that it's overpriced and the volumes are weakening. So this to me tells me that we don't really have too much upside strength here. That's Royal Dutch Shell. The next one that was on our list was Intertech. And by the way, this is where it should have gone to. Let me just, before I finish off with Royal Dutch Shell. Royal Dutch Shell should have fallen to here, which is the drop for the dividend, fundamental reasons. It went nowhere near that. There was clearly a tug of war where there was upside strength competing with the downside dividend adjustment, and the upside clearly won yesterday. Intertech, again, let me just quickly put in my day markers. Okay, this is Wednesday. Margin up. Thursday, not so strong, marching up. It drops, hits the dividend adjustment for the fundamental one. It doesn't do the additional mass scope adjustment, doesn't do that. And then it basically marches up, following the FTSE. Today, there's FTSE weakness, so this is now coming down. What can I say about this one? I can tell you that when it dropped, it was clearly not too cheap. I can tell you it's crossed here. In fact, this is in the middle of the range. So this is where I find this interesting. RSI for me, RSI is here, this little area. RSI below 30 is too cheap, above 70 is too expensive. When it's in the middle, it's telling me nothing, okay? Here, it was quite close to the top, but it didn't become too expensive. It was just kind of in what I call fair value. Fair value is between 30 and 70. So there's no indicator here telling me it's going to reverse direction. MACD crossed here on weakness from the FTSE and obviously here. And if we look at the volume is basically weak for today, relatively weak compared. Actually, no, when you compare it with yesterday, apart from the final closing bullish move, it's in the same range. It's in the same range. So it's nothing to report there. So nothing to report on the volumes, nothing to report on the RSI. MACD has crossed, and now it's basically curling back up again. If we look at the histograms, we can see the histograms was there, then it got longer, and now it's reversed. So this one looks like it wants to kind of go back up. The next one, Glaxo. What's going on with Glaxo? Again, let me put my day markers in. And again, Glaxo, very bullish. Bullish there, bullish there, bullish here, and then it's now kind of getting weakened by, well, the upside strength has gone, basically. The upside strength has gone for this morning. And HSBC, last one. Let me just, again, put in my day markers. Okay. Wednesday, Thursday, today, Friday. What's going on here? Well, we can see that the dividend adjustment is this line here at 654. It went nowhere. What went? Tried to get there, but the third candle was given up, and it started to become very bullish and moved upwards. Again, the FTSE was bullish. We know that. Today is gap down. This is quite a big jump actually. It's gap down, and then it kind of, did a final flurry on the upside, ran out of steam, and it's now coming down. RSI, not much going on. You had quite a big push upwards here. So you had a bullish first 15 minutes, quite high volume actually, relative to the next one. This one, it's like the completely volume is gone. And if you 8:15 is anything to go by, this is a big drop in volume. So even though that was green, this was it's very, very weak. It's very weak. We're seeing some slippages, and it's come back down to this one. So will it come back to here? Well, we need the FTSE to fall for that to happen. What else can I tell you? Let's go out to Royal Dutch Shell. So Royal Dutch Shell is an oil company. The question is, the FTSE was obviously marching up. We saw that already. But I want to look at oil because I want to see if there's anything going on with oil. These are daily candlesticks for oil. So oil was bullish Wednesday, so bullish Tuesday. And that's interesting. It's almost following the FTSE really. So Monday was bearish, bullish, 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 and then today it's kind of weak. It's near the top of the Bollinger. So unless it pushes the Bollinger up, it could just literally reverse from here and start coming down. This is going to be a point of resistance right here, 70.95, as it hits the moving average in the Bollinger. And who knows what can happen from there. It's in the fair value range, so it's not too expensive, not too cheap. This could go anywhere. This is going any direction. But you can see that the Bollingers on this anyway, it's relatively narrow here. So in this area, it's relatively narrow. And since then, it's kind of maintained kind of an evenness of volatility, you could argue. It was near the top. It's due to come back down again. If I look at this is Brent crude. I'm looking at Brent crude. So Brent crude is weakened, and it's just thin, basically not going anywhere. If I look at US crude again one day, we can see again bullish Tuesday, bullish Wednesday, well, kind of flattish. Bullish Wednesday, bullish Thursday, and then today, Friday, not much going on. If we look at the volume here, though, the volume here is going down. The volume on oil, American oil, is going down. Let me look at the volume for the volume on here. This is interesting, yeah. The volume here is going down. So even though the strength is going, the price is going up, that's your ripple effect, which basically means if this keeps on doing this, this will not be sustained or eventually reverse. Weak volumes and rising prices means that it's going to run out of strength eventually. If the market makers are doing it, then it's all fake. It's a fake increase. That's not going to last. Let's go. So let me just go back to FTSE. You've got reduced volumes again here. Let's go to. Let me see what trend it was in. So I'm going to go today now, one day, and I'm going to look at HSB for a day. I want to see what trend it was in before the FTSE, before the ex-dividend date. So it's kind of moving up here. Then it started to get very bearish, dropped from here downwards, and then it's kind of going sideways. So it's almost like hit a bottom, and then it started to kind of trickle up a little bit. So that was a trend that HSBC was in. Glaxo, what trend was you in? Well, Glaxo was an upward trend starting from Monday. So it was kind of going upwards. And so if it's going up, and that's Thursday, then effectively, yeah, it's an upward trend. Intertech per day. Right, very, very bearish up until Monday, and then he bounced. And this week was a bounce in the upward direction. So this is kind of like almost like following the FTSE. And it was bearish up until Monday, and then bounced on Tuesday. I'm sorry, it bounced from Tuesday. Intertech rolled that shell. This is the culprit for this week. What are you saying? This was bearish from last Wednesday, bullish from last Wednesday. So this is in a little bull run, and it's been bullish for a little while now. Well, it was bearish up until Tuesday, the 7th of May, 10 days ago, and then from Wednesday last week, it's been in a bullish pattern, and it hit the bottom of the Bollinger. So it was only ever going to go up, basically. It's near the top of the Bollinger, so it should now start to reverse and come down. And there was a big volume spike right here. It's a volume spike. So it basically came down. It was still within fair value range on the RSI, which is interesting. So, and then it reversed. The MACD reversed right here on Monday. It's been going up. And what MACD is doing is confirming a reversal in trend. So obviously it started to move up really from Wednesday, and you got the MACD confirmation the following Monday. Up. But I think the upside is now beginning to weaken. That's what I think for today. Tesco. Let's look at on a one-day basis. Tesco. All right, Tesco was in a bearish pattern from the 2nd of May until Tuesday. And then Wednesday, it reversed. And then we had the ex-dividend date, and then it dropped again for the dividend. Okay. It dropped for the dividend, which is normal. It hits the break even right here. And then, well, just flatlined really. It's flatlined. Now, I did say that the last two times last year, it recovered very quickly. But I did say, I recall saying that they paid a very, very small dividend last time. And I want to go back to this idea of a pig being eaten by a python. If the larger the dividend, the longer it takes to recover on the upside. The larger the dividend as a percentage, the longer it takes to basically digest that meal. The bigger the meal, the longer it takes to digest. So I did say that I believed that I didn't think it was going to do what it did last year because the dividend is a lot smaller as a percentage, and this dividend has gone back to normal. When you look at the fundamentals on the accounts, the profits was very, very small. Let me just look at the dividend was very small. I'm sorry, not dividend, the profits. The profits on Tesco was small. For the previous years, and then last year, and then this year it bounced. 2018 it bounced up. Let's have a look at that quickly. Yes. So we had, in 2016, we had 200 million, and 2017, 145 million, and then we had 1.3 billion in 2018. So the dividend associated with those two smaller ones was a small dividend, and now they're paying a much bigger dividend, and that bigger dividend will take more time to digest before it can actually start to bounce back up again. And so I did say I didn't think it's going to recover as quickly, and obviously, but you can go back to the recording, you'll see if I said it or not. So Tesco is kind of following the the milestone investing rule of hitting this break even, and then it should fall some more. That part hasn't happened, but we shall see if it does before it starts to recover back upwards. And when it recovers up, by the way, it's going to come to here, the green line, when it recovers eventually. Okay, that's kind of a perspective on what's going on. Miles from Milestone Investing signing out. Take care, guys. Happy investing.